What's good, y'all? What's good? Welcome to the Passive Income Network. My name is C. Will, and we're hitting you with a live stream today to talk about some important current events that are happening right now and how those current events are affecting your money. So today's video is about Trump's war on Iran, how high oil prices affect your money. We're going to have 3 ETFs that should do well in your portfolio in this environment. And right now, this isn't political. This is about what's just actually happening. And the president of the United States, along with their partners in Israel, has decided to attack Iran. Okay. That's what they have decided. And this is affecting us in a number of ways. We're talking about inflation, and a lot of this inflation that we're going to be seeing in the near future, if this war continues, will be from high oil prices. So as you join this stream, make sure y'all say what's good in the chat, say hello, let me know where you're coming from. And as this video, this live stream continues, let me know your thoughts about what we're talking about today. So this is going to be more focused on the stock market. Now let's get to it and start with the important story right here. I got this one loaded up for y'all. Let's get to it.
New jobs data from February shows unexpected setback for the labor market. The U.S. lost 92,000 jobs in February. Some economists had been predicting a gain of 60,000 jobs. The unemployment rate rose slightly to 4.4%. Kelly O'Grady joins us now to break all of these numbers down. Kelly, great to see you. What do you think was behind this drop-off?
So specifically in February, Regis, I kind of want to add an asterisk to the drop because we had all of that bad weather, the blizzards. We saw a pretty significant drop in the leisure and hospitality sector because of that. 27,000 jobs were lost. And then also in healthcare, normally a big driver of job growth in the U.S. dropped 28,000. And that was because of a strike and one of the biggest healthcare firms in the country, Kaiser Permanente. So that's not something that you're going to see every single month. That being said, there were also revisions to the December numbers. We had thought we added jobs in the month of December, but we actually lost jobs. So you sort of zoom out, and 3 of the last 5 months, you saw a job loss. So we've talked about this slow to hire, slow to fire job market. I talked to a couple of folks today that they're saying, well, maybe we're kind of moving towards a slow to no hire job market, but we haven't seen mass firing. So that 4.4% unemployment number that you see on your screen right now, that is still in the healthy range. It's at the upper band, but definitely not something that you want to see. This is a slow growth job market, no growth this month. And I think the next couple of months are going to be really critical as people are, especially for the Fed, as they're thinking about growth.
And Kelly, since the start of the Iran war, crude oil prices are up about 35%. The stock market has fallen. Should we expect this to continue as the war goes on? And tell me what that means for me, for people at home, especially as they go to the gas pump, which is, I think, what everyone is thinking about right now.
Absolutely, right? Every $10 increase in a barrel of oil translates to 25 cents at the gas pump. And what I would say is fill up your gas tank right now, because we are seeing oil continue to go up. And actually, U.S. crude just passed $91 in the past hour. And so that is, we're certainly not where we were summer of 2022 when we had the record high gas prices of $5. But if we continue to see this go up, which you would expect as the conflict goes on, and we haven't really seemed to nail down what, naval escort and insurance means for the Strait of Hormuz. We also have production shutting down in a number of different countries. It takes a while for it to restart, even if things do calm down. So I don't want people to full on panic, but if you can fill up your gas tank now, it's likely a good idea because you're going to see gas prices go up at least a little bit over the next couple of weeks.
You hear that right there? I had to play this long clip for y'all because I thought this was very important that we all pay attention to what's happening in the world right now. Gas prices in America are slowly creeping up. And as the lady broke down, she did a great job. It will only continue, okay? It will only continue. And as a consumer in America, as a working American, we have to prepare ourselves. And let me show you this right here. So this is what's happening. I have the light crude oil futures price up. Look at these spikes, okay? We are above $100. Actually, it was as high as $111 just today. Could go higher. But we're at 108.92 1 day, 2 day, 3 day, 4 day, 5, 6, 7, 8, 9. The war essentially started about here, and prices were already creeping up above the 200-day moving average. And then once the bombings started really taking off, boom. And many analysts are saying it's going to go much higher than it is now. So we were doing pretty good. Prices were going down. Then boom, this conflict here. So this is something that affects us in many ways. Okay. Now check this out. I wanted to show you this. This is very important. So I put in a question or a scenario to Gemini, which is the Google AI here. And this is what it says. Rising oil prices trigger widespread inflation by increasing costs for transportation, manufacturing, and raw materials, impacting gasoline, groceries, plastics, and shipping. Key affected sectors include airlines, trucking, and agriculture. When oil spikes, it drives up prices for consumer staples, durable goods, and energy services. Okay, this is very important. So key affected products and services: energy and transportation, consumer goods and plastics, agriculture, construction, and manufacturing, y'all. Construction and manufacturing. Okay, so then you got scenario one. Rising food prices is because of increased diesel costs for tractors and shipping trucks, plus higher oil-based fertilizer costs, significantly increase the cost of food production and distribution. Okay. And then scenario two is reduced consumer spending and travel. Rising oil prices cause gasoline to exceed $4 per gallon. And right now where I'm at, I just paid $4.60 for gasoline per gallon. This leads to a higher airline ticket price, which are fuel surcharges, and reduce consumer disposable income, impacting travel industries and discretionary spending. That's the situation on the ground, y'all. Higher prices coming from all directions: travel, food, groceries, everything that's oil-based. Our whole economy is a consumer oil-based petrodollar economy. We want oil prices to go down, okay? Now, I want y'all to check this out. This is going to be a shorter clip. I thought this person also did a great job explaining some things. And again, as you guys join the stream, let me know what you think about this in the comments in the chat. We're going to cover 3 ETFs that you should definitely consider for your portfolio, as this war or this economic situation could go on for several months. Check this out.
Oil price is rising. We all get that. But this is something very important you need to understand. You want to talk about history in the making? Oil surges, this out of CNBC, 35% this last week for the biggest gain in the futures trading history dating back to 1983. This is where we are right now. And I don't think this is going away anytime soon, because Iran's not giving up. And we are seeing polarization of the world when it comes to energy, the futures trading of it, and what's happened to the BRICS nations that have been trying to build up and strengthen since 2014. This is not a small issue. All right, let me go over the key points. Oil prices surged after President Trump demanded unconstitutional surrender from Iran, right? We all know that. Yep. Qatar's energy minister told the Financial Times that Gulf exporters would halt production in days if tankers cannot pass the Strait of Hormuz. But there's a lot more to it than that. This could spike the price of oil to $150 a barrel in the coming weeks and bring down the economies of the world. Now, just so you know, this was a planned event. When I first started my other channel, in the first couple of years of doing videos, I talked.
Okay, so what he breaks down is that prices could go much higher from here. Okay, and that's not nothing to be actually smiling about. I'm just like, damn, right? It's nothing to be happy about. Again, I told you today prices spiked above $111. So y'all Do me a favor, hit the like button, hit the hype button, help boost this video. I really appreciate y'all's support. Now let's get back to this here. Prices are going crazy, okay? This is not what you want to see. And if we go look at the US dollar, it has broke through a trend line that I've drawn on there recently. It's above the 200-day average, a dollar going up. All of this affects crypto. All of this affects stocks. If we go look at the volatility index here, I drew a red line and I drew a green line, okay? Let me know if this makes sense to y'all. So this red line is danger. This is when prices of stocks and equities go down. This red line is danger, okay? And it gets worse when you got the green line. The green line, I put the green line on there because that means you should be buying for your long-term portfolio. This spike here was tariffs, April 2025. The market went down here to some of its fastest, lowest levels since we've seen in years, since COVID. That was a buying opportunity. We are now here. If we go up any higher, this will be great for purchasing your long-term portfolio. And a part of this is happening because of the war and political uncertainty. Look at this spike here. Now, I got another video that we're going to talk about. Any chats, any questions? Here we go. I got a question. This question says, what should we do? Stock up on groceries? That's a great question. That is a great question. So after another clip or so, I'm gonna play you. I'm definitely going to talk about what to do as a investor for your portfolio. But in terms of food, what I am doing, okay, and I think you could consider this as well, is shopping at Costco. Costco, you can buy bulk goods, okay, and they even have organic bulk goods. And if you have yard or land, which I'm also considering, you can maybe grow some groceries depending on the climate and what country, state, city that you live in. Here is becoming spring, so we're thinking about some crops that could grow in the spring, but definitely shopping in bulk at Costco, trying to limit how much we eat out. Think about hitting more of the beans, of the rice, those type of fiber rich and vegetables. Maybe stay away from the dairies, maybe stay away from the meats as much as possible. Prices will continue to go up. Let me know if you have any follow-ups to this. And obviously, the main thing is try to save as much money as possible so you can buy the dip. Here we go. Let's continue. And this is from a channel I like to follow here, Clear Tax Value. Brian does a great job. Check this one out.
Moving on, I want to tell you about the problems with rising oil prices. So several things happen simultaneously. Of course, you have gasoline prices rising, and that's going to affect consumers. Diesel fuel rises, and that's going to affect everything from farming to construction to shipping, etc. Jet fuel rises, and chemical inputs become more expensive. And I just want you to know, because a lot of people are not aware of this, that countless products contain oil-derived ingredients.
Even makeup.
Okay, like what? For example, makeup, perfume, lipstick, moisturizers, shampoo, conditioner, deodorants, polyester, nylon, spandex, plastic, paint, electronics, tires. I'm telling you, the list is endless. So if the price of oil goes up, then it's going to affect all of these products and more. And when the price of oil rises, consumers spend more on everyday goods and necessities due to inflation. Now, let me show you the impact on gasoline prices as of today. In the US, the national average for a gallon of gasoline is currently at $3.20. Yesterday, it was at $3.11. A week ago, it was at $2.98. And a month ago, it was at $2.89. And I just want you to be aware that these are national averages. In California, it's at $4.74 a gallon. And that's just the state's average. Like, I'm sure that there's cities within California where it's much higher. Okay, the bottom line is that when the price of oil rises, consumers spend more on everyday goods and necessities. And when people are spending more on necessities, then they're going to spend less on discretionary items. And the US is a consumer-driven economy. Consumer spending makes up 70% of US GDP. So even modest pullbacks in discretionary spending can ripple through the broader economy, which is going to increase the risk of a recession. And of course, it's not just consumers. Small businesses, industrials, airlines, logistics companies, retailers are all going to face higher input costs when the price of oil is going up. And many of these companies, yes, they can eventually pass these higher costs down to the consumer, but oftentimes they can't do it immediately. And this is going to hurt their margins, it's going to hurt their profits, which can lead to layoffs. And of course, if corporate earnings are going to go down, then it's going to be a headwind for the stock market. And then there's going to be consequences on monetary policy from the Federal Reserve. Because if you have oil prices rising up like that, then that's going to impact CPI headline inflation. And that's going to put the Federal Reserve in a difficult position if inflation is elevated. So if the price of oil spikes up, then the Federal Reserve may delay rate cuts. They may keep their policy tighter for a longer period of time. And they're basically going to be signaling caution. In other words, it's just going to become a more challenging environment for the Federal Reserve to come to the rescue with an easier monetary policy.
You heard it. You heard it. Great breakdown from Brian over there, Clear Tax. This is causing a lot of problems here. So again, we have to prepare ourselves. We have to prepare ourselves. Rising inflation, which means the Fed probably won't cut. What does that affect? That affects the stock market. That affects Bitcoin. That affects the rest of the cryptocurrency industry. If there's not going to be an injection in money like we've seen during COVID, this is going to make it harder for prices to rise. And now we get to the main point of this video. I have 3 ETFs that you could consider for your portfolio in this type of environment. Now let's get to it. The first one up, this one has been on a tear and for a reason. This one here, we have XLE. This is the State Street Energy Select Sector ETF. This is the energy sector ETF, one of the 11 ETFs. The key features of this ETF, State Street Energy Select Sector ETF, seeks to provide investment results that before expenses correspond generally to the price and yield performance of the Energy Select Sector Index. This index seeks to provide effective representation of the energy sector. So we're talking about oil companies. We're talking about oil services companies, companies that provide what we need. And if those prices are going up, most likely those companies are going to be making more profits. That's just what it is. And even utility companies, right? Seeks to provide. Okay, so we're going to go down and we're going to look at some of the companies in this index. Let's go to the holdings. So we have Exxon Mobil, 23%. Exxon used to be a giant back in the day, and now it's right now working on making a comeback. Then we have Chevron. Chevron's also getting the easy money in Venezuela right now. ConocoPhillips, that's Phillips 66, big player in the games. Williams Company, Egro Resources, SLB. SLB converts and does the transitionings of the oils, okay? They work directly with the oil. Then you got Valerio, Phillips 66, Kinder Morgan, and Marathon Petroleum. These companies here are very important for the index, and they take up a position, and they have been doing really well, and a lot of them pay dividends. So let me tell you our key. A lot of investors are looking for dividend-paying companies, companies that have been reliable and stable all these years. And then the energy sector, this is a sector that will benefit from higher prices, higher gasoline, a crunched and a scared consumer. People are going to buy gas regardless. People are going to pay their utilities regardless. It's happening anyway. So that's what it is. That's the first ETF I have for you, XLE. What stocks do you recommend we buy as we hit low prices? Oh, we talking about that. I got my third ETF is definitely going to answer that question. My third ETF is going to answer that question. Let's get to the second ETF. Great question. Great question. Stay tuned in. So the second ETF that I have for y'all here is called SCHD. That's the ticker symbol. Schwab US Dividend Equity ETF. And again, the highlights of this is very clear. This is a straightforward, low-cost fund offering potential tax efficiency. The fund can serve as part of the core complement in a diversified portfolio. It tracks the index of focus on quality and sustainability of dividends, okay? And it's very strong ETF that's up about 13% this year alone. Now, let's go to the portfolio. And these companies here are very important. Okay, Lockheed Martin. Y'all know about Lockheed. So as war efforts go on, Lockheed is a war manufacturer, missiles and components. Lockheed pays a dividend. That makes it a great pick. You have ConocoPhillips. We just talked about that. It's in the XLE ETF. Verizon, communications, satellite and all that, it's still going to be happening. You're still going to be on your phone. Chevron, Bristol Myers Squibb, Altria Group, Merck, that's a medical. You got Coca-Cola. Coca-Cola is doing great right now. PepsiCo and Texas Instruments. We will be having a rebalancing coming up on the 11th, roughly, in about the next week or so, actually. Maybe the 11th, I think that's what it was, or the week after. That rebalancing is going to remove about 20 or 30% of the companies that have not been performing well, and they will replace them with companies that are performing well. So think about the utilities, think about the energy, think about the defensive industrial sector, okay? So that's what I got for y'all. That's the second ETF, is SCHD, up about 13% for the year. And to answer your question, what stocks do you recommend we buy as we hit lows? Let's talk about it right now. I got this ETF for you. This one is called SPMO, Invesco's S&P 500 Momentum ETF. This has a rebalance coming up in a few weeks. But here we go. So what this portfolio does, let me just read this for you. The Invesco S&P 500 Momentum ETF fund is based on the S&P 500 Momentum Index. The fund generally will invest at least 90% of its total assets in securities that comprise of the index. So you got 500 S&P 500 companies. This fund takes 100 of them. The 100 that have the best momentum, that best track record in the last 6 months. That's what it does. So 20% of the S&P 500. Okay. And the performance has been amazing, performing at least 17% every year for the last 10 years. And the good thing is, when the stock market has a downside, SPMO does really well against downside risk, just like SCHD goes up. Okay. So if you're holding tech stocks and all that, which we're going to get to. Now let's look at the portfolio. Broadcom. So to answer your question, Broadcom is a great company to buy the dip on. And this is the largest position right now in this portfolio. Broadcom, AVGO, then you have NVIDIA, and you have Meta, 3 giant tech companies. If you can, those are great assets to have in your portfolio. But if you're buying this one, which has been flat, let me show you on the chart. It has been really flat since basically August, okay? It's been flat. This is an area showing you that when the market is on a down draw, SPMO has been flat and sideways. That's very important. Why is it important? Because you can then be dollar cost averaging, like I'm doing, into this. And if you go look at companies like NVIDIA, pretty solid flat. If you're looking at QQQ, it was flat. Now it's going down. SPY, this is S&P 500, is also going down right now. Google heading down. Microsoft beat to oblivion, okay? Amazon beat up, and the list goes on. But if you're looking at SPMO, this has been solid, and once the market starts to rise again, you're going to be in great position. So let's look at the rest of this. Then you have JP Morgan. So it's diversified. It has big tech, but also has big finance. Palantir, a war stock right now, and an AI stock. Netflix, which has been beat down, and now they'll be rising because that deal with Paramount is over. HBO Max, that deal is over. Paramount gets HBO Max, essentially. Netflix gets free $2.8 billion, and everyone's happy. Then you got Walmart. This is a consumer staples. When Walmart is great like Costco during a time like right now, cheap food, okay? Visa, the dominator of the credit cards and payments with the cars that we use, GE, Verona Energy, and then General Electric. That's what I got for y'all. That's the 3 ETFs that are great to have in your portfolio during Trump's war on Iran, high oil prices, and inflation, y'all. So let me know what you think about those 3 ETFs. If I answer your question, leave a fire in chat. If you have any more questions, definitely leave them in the comments. But today, we have to focus, y'all. Geopolitics are affecting our money. We have to position ourselves, especially if this thing happens, this war goes on for longer. So I wanted to talk to y'all about the stock market, okay? And this is something I'm going to be doing a lot more because I am also really into the stock market, into trading, investing long term. And obviously, I'm really into crypto. But my whole thing is passive income. Can we buy the dip and make money passively? Can we get in and create a portfolio that can pay us income passively? Income producer, investor, exactly what I am. And I like to buy the dip as well. So let me know what y'all think about that. That's what I got for y'all on today's video. I definitely appreciate everyone for tapping in. Make sure that you hit that hype button on your phone, hit the like button. I appreciate your support, and I will see you on the next video. Until the next time, y'all, peace. Passive income, gold in my dental, thank God for my mental. Investor fundamentals, told my girl it was simple.